Alibaba Chairman Joe Tsai warning of a potential bubble forming in data center construction. Those comments coming against the backdrop, of course, of a massive push from big tech for AI infrastructure. For more, we're bringing in now Doug Clinton, founder and CEO of Intelligent Alpha. Doug, always good to see you, my friend, on the show. Let's get to these comments, Doug, from Mr. Joe Tsai, warning of this possible bubble in the AI data center build out. He says here, Doug, I start to see the beginning of some kind of bubble. Tsai said, I start to get worried when people are building data centers on spec. You read those comments, Doug. You saw them. They got a lot of press and headlines, and for good reason. What did you make of them?
I'll tell you, Josh, I feel like Joe Tsai is sort of saying the quiet part out loud, and everybody that is tracking AI closely, I think including the hyperscalers who are investing tens of billions of dollars a year right now in this AI CapEx build, I think everybody sort of knows that things are heated, maybe a little frothy, and maybe we are on the verge of the bubble. And so it's funny, his comments are getting a lot of attention, but in my opinion, look, we've been saying that we think there's this 2 to 4 year window that we're in right now where we will have an AI bull market. It will get frothier and frothier over time. I think it will result in a bubble similar to the dot-com era. That doesn't mean that we are in a full-blown bubble right now. I don't think that's what Tsai is saying either. But I do think people are just going to be talking more and more about this concept as the bubble heats up.
So if you're an investor, and you are, looking at this opportunity, and you're seeing it play out eventually as maybe an overextension on the part of some players, do you even worry about that right now? Or do you just sort of go all in and worry about that on maybe closer to the peak of the cycle?
I think you always have to worry about it, Julie. And throughout these cycles, if you go back to kind of the dot-com era, you do have periods of sort of undulation where at times locally, right, at that point in time, the market gets a little overheated, sentiment gets a little bit too hot. And then you have periods of time where I think the sentiment is actually quite reserved. And if you look at the beginning of the year to now, I think at the beginning of the year, sort of January to February, AI, the trade got really heated. We saw a lot of these energy plays getting bids, to kind of fuel some of these data centers. So everything that touched AI was just working. And then we had the DeepSeek moment. And for the last 4, 5, 6 weeks, I think the AI trade has just been totally broken. And now I actually think we've gone into a period where some of the fundamentals and some of the investments that are being put in this space, in some ways, I think aren't even being reflected now in some of the bigger AI names. And I think it's a good time if you have a 2 to 4 year horizon, like we're kind of talking about with this potential bubble. I think it's a good time to add AI exposure where the fundamentals right now are actually perhaps discounted to some extent by the market.
And so if you're looking to add AI exposure, Doug, what as a tech investor yourself, what interests you?
I can tell you at Intelligent Alpha, we use AI to do our stock picking in our portfolio. And so for our Livermore Fund, LIVR, the main AI exposure we have is still in the chip space. So NVIDIA, TSM, and Micron are the 3 major AI holdings that we have in that fund. And then on the software side, I think there's opportunities in Atlassian, so Team, TEAM, and also HubSpot as companies that are really starting to build AI products or AI capabilities into their products. And hopefully we start to see some of that translate into accelerating revenue sort of in the back half of this year.
So Doug, I guess then I would go back to my question for these specific names, particularly for the chips. If we are building towards a bubble and then an eventual rationalization within this space, at what point do you pull the chute, right? At what point do how much more growth do these companies have before you hit that point?
It's an uncomfortable answer, but it's the most honest one, is that it's partly about the fundamental realities and it's partly about vibes. That's kind of the hot word, I think, right now in the investment world, in the venture capital side, where we also play. But I think you need to sort of monitor both. And what I would say, again, going back to what is the current state of the environment right now, I think the AI fundamentals are still strong. We're still seeing these hyperscalers investing huge amounts of money that's benefiting NVIDIA. I think it will benefit, Broadcom. By extension, Taiwan Semi plays in all of these spaces. And so these companies are still benefiting. That's the fundamental reality we're in. From a vibe standpoint, the market just doesn't want anything to do with AI right now. The excitement around the trade, I think, has totally reversed. If you expand out, though, into that 2 to 4 year window, sort of how do you know when it's over? I always think one of the greatest sort of heuristics I've ever heard for understanding when a bubble is over was from a book called The Go-Go Years by John Brooks. And in it, he retells some of the bubbly behavior in the 60s and 70s. And the adage they had was, look, like bubbles don't end until basically the new issues market is completely wide open. The worst companies in the world can go public. We absolutely have not seen that yet in this current tech cycle. We haven't even seen the good companies come out yet. And so I think that's one reason to believe there's still probably a long way to go in this cycle.
Okay, you're far away from pulling that chute then. Thank you, Doug. Appreciate it. It's always good to talk to you.